The US jobs market has fully healed. It's time for rate cuts. Good morning and welcome back to Morning Markets here at True Potential. The focus again this week is on the US, and that's because tomorrow gives us the non-farm payrolls print, the most eagerly awaited jobs print since the last one. So what's leading us up to this moment? Well, it's the JOLTS survey which was published yesterday. This is the job openings and labour turnover survey for the US, which breaks down the employment market into hires, quits and openings. And those quits are sometimes called separations. But aggregating that data gives us a good read for the health of the US labour market. Now, the first message is the market remains very healthy. The rise in unemployment we've seen over the last 6 months is all because of more people entering the workforce than can find employment. Jobs growth remains. Unemployment unusually is rising simply because people aren't being fired. So what does the JOLTS survey tell us? Well, openings continue to decrease and are now back to levels last seen at the end of 2017. So we can say that the demand for labour is now in a greater balance and reflects the pre-COVID era. The other is hires. Hires are now back to levels last seen in 2018. So again, further indication of a more normalised labour market. And lastly, quits. Quits are important because when quits spike, it usually reflects people are more optimistic about getting a higher salary elsewhere and more optimistic about retaining their employment at a new employer. But quits have decreased substantially and are back to levels at 2017, again reflecting a more mature jobs market. And all of this corroborates the jobs data we've been seeing in other surveys and measures over the last 6 months. It really is now time for the Federal Reserve to cut interest rates. And the only question is whether they begin with a 25 basis point cut in 2 weeks, or will they go for a 50 basis point cut? That leads us to tomorrow. If tomorrow's non-farm payrolls print sees another rise in unemployment, then we're likely to see a 50 basis point cut beginning in 2 weeks. And that's because the Federal Reserve Chairman, Jay Powell, really did indicate that their appetite for any further rise in unemployment is over. So it's really actually quite constructive news. And one of the reasons why markets are a little bit off this week is they're just being a bit cautious about the likelihood of a rise in unemployment tomorrow, but we're definitely going to see rate cuts in 2 weeks. It's just a case of how much and how far. So that's all for today. Thank you very much.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.